Okay, so now we talk about the forex market proper, right? We want to know about the forex market. What exactly is forex? What is the forex market? Who are the participants in this market? When do you trade? When can you trade? How can you trade? What do you trade? So basically, we'll be touching on all that in this lesson, right? Now, forex stands for foreign exchange, as you might have guessed or as you might have heard before, right? Now, the forex market is a decentralized over-the-counter market for currency trading. So basically, what these terms just mean, decentralized, like there's no single location where forex traders go to place their orders. You understand? Like it is not in anybody's purview to be the main location for forex trading. It is decentralized. You can trade it from anywhere in the world. Basically, it is decentralized. It is over the counter. You can trade it as a retail trader. You don't need a third party to be there for you to trade forex. Really, no. So it is the largest financial market in the world. Like the stock market, it dwarfs the stock market in terms of volume traded per day. The forex market trades in volumes of 6.6 trillion per day, trillion USD per day, according to the Bank for International Settlement in 2019. If you check, the stock market trades in volumes of about a third, of this volume that you see here. So the forex market is very large. A lot of money passes through the forex market on a daily basis. It is open 24/5. Now, what does this mean? Now, the forex market, it is open 24 hours a day, but 5 days a week. That's why it's not 24/7. 5 days a week, being Monday to Friday. Although, when you really look at it, the forex market actually in this part of the world now in Nigeria that we are, right? The forex market opens on Sunday evening, right? And closes on Friday evening. Why it opens on Sunday evening for us here is because in New Zealand, right? New Zealand is on the extreme eastern part of the world, right? So they get to see like daytime earlier than we do, right? So they are about 12, almost 12 hours ahead of us, basically. So when it's Sunday night for us, it's already Monday morning for them. So, and that's where trading usually starts from. We'll talk about trading sessions very soon. That's where trading usually starts from. So, because of that, it starts on Sunday night here, but we'll be learning a lot about when you should trade and all that. You get. So, it is 24/5, 24 hours a day, 5 days a week. Now, who are the major participants in this forex market? Simple. The major participants, the biggest participants, like the most important participants in the forex market are the big banks, right? The big banks. Now, the big banks, like when we say big banks, these are not just any banks, right? They are the biggest banks in the world. Like I'm talking of the biggest banks in the world, right? I just listed some of them in bracket here. Deutsche Bank, UBS, Citigroup, Goldman Sachs, HSBC. Now these guys, like they contribute the highest volume of money. This 6.6 trillion USD per day that you see up here, right? It is the big banks that contribute the bulk of it. Like they trade in very high volumes, so they contribute some, according to some reports, they can contribute as much as 70 to 80% of the money that passes through the forex market on a daily basis. So they are the biggest players. They really move the market because they determine the direction the market is going to move based on how much money they are putting into it. So the big banks are the biggest players in the forex market. Then you also have some other banks, of course, when you're talking of other banks from other countries, central banks of some countries and all that you get. So all those ones they also participate in the forex market. You have hedge funds also participating in the forex market. Then you have Forex brokers. You have Forex brokers, ECN brokers participate in Forex market. Then it's not written here. Um, Retail traders, basically individuals like you and I that want to make profit from the Forex market. We are retail traders, right? We are retail traders. So we trade with the aid of a broker, like through a broker. We trade through a broker. We participate in the forex market through a broker. We are retail traders, so we are also participants in the forex market, but we don't contribute as much volume as these other guys, right? Now this is just a schematic, just a diagram showing that. So the retail traders, banks, companies, and even the government, yeah, the government of different countries participate in the forex market. So you can be assured that this is something that everybody is into. You understand? Everybody is into this. Everybody is into the forex market. Now, how does the forex market work? It is very simple. Like it is pretty easy. Pretty easy, right? So basically when you're traveling out, right, you go to the airport. For those of us that are frequent are conversant with that, right? Okay, but for those of us that might not be, when you go to the airport, of course, you always like when you're going to another country, of course, so you always need to change some money because you can't spend the naira when you get to the country you're traveling to, obviously, right? So you have to exchange currency, basically. Now let's say, for example, I'm going to the United States, right? And I'm right at the airport. Now, let's say as at the time we are speaking now, let's say as at the time we are speaking now, $1 exchanges for 450 naira, right? So that means that 450 naira will give me $1, right? Now, let's say I actually have 400 and let's say I have for some reason 45,000 naira, right? Let's say for some reason I have 45,000 naira that I want to take along with me. Now, right there, I give the 45,000 naira, I get 100 US dollars, right? Based on the calculation, the exchange rate of 450 naira to $1, right? So 45,000 naira is going to give me $100. Now, let's say I stay there for a while, I stay there for 2 weeks, and I don't touch um the $100. I don't touch it at all, right? Now I'm coming back. Now I come back at that same place. Now I want to change my money back to naira. I mean, I did not spend it, so I want to change it back to naira, my 100 US dollar. Now let's say the exchange rate has now changed from 450 naira to $1. It's now 500 naira for $1. So you now need more naira to get $1, right? So you can say that the dollar has appreciated against the naira, or you can say it the other way around, that the naira has depreciated against the dollar. So you now need more naira to get you $1. So your your 100 US dollars that was 45,000 naira before you left Nigeria, now because the exchange rate has changed to 500 naira, when you do the calculation, that same 100 US dollars, right, is going to become 50,000 naira, meaning you have made a profit of 5,000 naira within 2 weeks on that exchange. Basically, it's that simple. That is how the forex market operates. The only difference is that in the forex market, this happens instantaneously, like immediate. You don't have to wait for 2 weeks or travel to one country. You don't need that. Immediately, right there on your phone, you can do it. Like you can do that, and you can be seeing the results as it is happening immediately. It's pretty instantaneous. basically. So now talking about let's talk about trading sessions. Let's talk about trading sessions. Let's talk about trading sessions, right? Now, although we said that the forex market is open 24 hours a day, 5 days a week, it is still subject to trading sessions. Now, trading sessions are just like, okay, what are the time frames for different, there are some major centers, major economic centers when it comes to forex trading, right? So, what are the time frames where these major centers really operate, right? What are the time frames where they really operate? That's what brings about the concept of trading sessions, right? These trading sessions take place at different times of the day, depending on which part of the world you are in, right? So there are four major sessions, right? The Sydney session, Tokyo session, London session, and the New York session. So basically, right, the time for these sessions depends on which part of the world you are in. But here I've written the sessions, the time in GMT, in Greenwich Meridian time. I've written it here so that we can understand really where, how to really check for, okay, what times do these sessions run. Now for the Sydney sessions, that's the first session that starts. That's the first one because Sydney is in Australia. Sydney is in Australia, and it's close enough. Australia is very close. They are a neighboring country to New Zealand, right? They're close to New Zealand, and in that part of the world, they have daytime earlier, way earlier than we do here in the more western part of the world, right? So that's where trading starts from, right? So Sydney, 10 p.m. to 8 a.m. the next day, 10 p.m. to 8 a.m. GMT. I've written all the time in GMT, 10 p.m. to 8 a.m. Tokyo is 1 a.m. to 10 a.m. London is 8 a.m. to 5 p.m. and New York is 1 p.m. to 10 a.m. Right now, you have to factor in that we are currently, as I speak to you, today is 6th of March 2021, right? As I speak to you, you have to understand that we are in this part of the world, in Nigeria, we are 1 hour ahead of Greenwich Meridian time. So you have to add 1 hour to these times to get accurately what time those trading sessions will be taking place in. So now, why are we talking about trading sessions? You wonder, like, what's this whole trading sessions? Why do we need to know that? Now, forex, right? It is very volume dependent. Now, what are we talking about? What do you mean by volume? I'll still touch on volume later in the course, right? But volume, just imagine volume as it is what drives the market. You get, it's like the force that drives the market. You understand? So imagine that force is very weak. It means that the market will move very little or not move, like make very minimal movement. And the thing about very minimal movement is you can't really make money from small movements. You need the market to move a lot for you to make money, like to make a lot of money, to make more money. You understand? So when the volume is low, you don't tend to make as much money you will make as when the volume is high. So you would observe that these sessions, some of them trade, the volumes at these different sessions vary, right? It's been found that most of the volume in forex trading happens during the London session. Happens during the London session. You understand? Now, another thing to know is these sessions, right? Most of the volume in forex trading happens when some of these sessions overlap, right? When two or more of these sessions, when they overlap, you have a lot of volume being traded. And when a lot of volume is being traded, the result you get is that the market will move a lot, and the chances of making money will skyrocket basically. So that's just it. Now, the next thing we'll talk about, forex brokers, right? Forex brokers. Forex brokers are financial service companies, right, that provides traders access to a platform for buying and selling foreign currencies. What does this mean? It just basically means forex brokers are your go-to guys for trading. You understand? They are the people that enable you to trade. Yeah, they are the people that actually enable you to trade. It's on their platform, so to say, like that you can actually get access to the forex market. Now, um, these forex brokers, like there are a lot of forex brokers globally. You have to understand that, like, a lot. Now, you wonder, like, what is their own goal? Like, how do they even make money? Like, okay, they are they helping, in quotes, are they helping me? Are they really helping me? How do they make money? Now, they make money from spread. They make money from spread. I'll talk about what spread is, you understand? But just understand that they make money from spread for now. I will explain spread later in this course. They make money from transactional fees. So they charge, some of them can charge transactional fees, right? There are other charges too. Sometimes they offer you software, they offer you access to some exotic pairs or special instruments, and you pay. If you don't understand most of this, you will understand it as we go on. Don't There's no need to bother about that. Now, what are the features of a good broker? By the time we finish the course and you want to choose a broker for trading, you need to put these things into consideration. A good broker must be licensed and regulated by the authority in the country. Of course, the central bank, the government, must be licensed, must be regulated. Now, a good broker must provide you with a demo account. Now, by the time when you're starting forex trading, right, it's always best to start with demo account. What is a demo account? A demo account is a forex trading account where you are given access to money, only that money is not real money. So you will trade like you're actually trading the forex market. Like you're actually trading the forex market. It's just that you are not trading with real money. So there is zero risk involved. You're not risking your own money. So the advantage of that is you can learn as much as possible. You can do whatever, practice, and get very good at forex. So a good broker should be able to offer you that, so you can trade, so you can use that as a means to practice forex trading and get good at it. Now, a good broker should also be able to give you a variety of account types. So, based on your personality, based on your needs, a good broker should be able to offer you options, right? Different options on what kind of accounts you want. We'll learn about all those things in details, because if I try to break them down now, we might not really get them. But a good broker should be able to offer you a variety of accounts. A good broker should offer a wide range of trading instruments. So basically, there are a lot of things you can trade in forex, right? But what is mostly traded in forex is currency pairs, right? Currency and currency pairs. But you can trade metals like gold, like silver, platinum, and all of that. You can also trade indices. Indices are like a collection of stocks of major companies and all that. We'll learn more about that later, right? So you can trade, even some brokers offer an opportunity to trade cryptocurrencies. So you can trade a whole lot of, you can even trade oil, you can trade commodities, basically a whole lot of things that you can trade in forex. So a good broker should be able to offer you the choice to trade any of those things, most of those things. So a good broker should be able to offer you that. A good broker should offer low spread and transactional fees. Now, remember the slide before this, I talked about how they make their money. They make their money from spread. I mean, we'll learn about spread, but what you should know about spread is low spread is good, high spread is bad, basically, because low spread means that you are paying more to trade. Low spread means that you are paying less to trade, rather. High spread means that you are paying way more to trade. Then transactional fees, they should not charge a lot of transactional fees. Then there should be ease of deposit and withdrawals. I mean, at the end of the day, you are trading forex to make money. So if you are making the money, I mean, if you want to withdraw your money as easy as possible, as easily as possible. So you don't want anybody stopping you. You don't want anybody giving you headaches. So you want ease of deposit and withdrawals. Then they should also have a well emphasized risk statement. So for a beginner trader, like a beginner trader or even an intermediate or experienced trader should always be reminded that the forex market is risky. Make them understand the risk. So you should always put that risk statements there, make them understand the risk of what they are trading, and always ring it in the ears of traders. It's always good to see. So a good broker should have a well emphasized risk statement. So okay, yeah, some examples of globally recognized forex brokers, right? You have IG, you have Saxo Bank, XTB, Forex.com, eToro, City Index. There are a whole lot of them, like plenty forex brokers in the world, right? Some that really operate in Nigeria. There are more than this, but some of them, just picked a few of them: FXTM, Hot Forex, OctaFX, XM, Eagle Global Markets, and so on. So basically, those are the forex brokers we have here in Nigeria. Um, so in the next lesson, we'll talk about currency and currency pairs, right? We'll talk about currency and currency pairs. It's still part of this lesson, right? But I don't want to make this longer than it is already. So next lesson we'll talk about currencies and currency pairs.
Keep it softly spoken.